Now, next, we will be looking at precious metals. I'm not going to say precious metal. I want to say metal complex because I've expanded the outlook to cover some base metal here. Now, here, of course, we knew that at the beginning of the week, silver has been a major beneficiary. Silver has only been trading for slightly over 2 weeks, and it has already gained 26%. This is massive, okay? We have not seen any kind of market gaining so much ground in just 2 weeks of trading into the new year. Silver has been setting records the whole of 2025, and that trend has continued despite the possibility of that Bloomberg Commodity Index having to be rebalanced. I did mention that last week. I say if there's going to be any pullback, it could be due to the rebalancing in the commodity index, but that did not stop gold and silver from trading into fresh all-time high this week. Okay, so here we can see that the prices has continued to be very, very strong, and that has actually to do with the very structured shortages in the marketplace. Okay, and of course, we have seen since the start of the war in Ukraine and the fact that the West has actually weaponized the global payment system, and we can see all countries has been trying to divest themselves from dollar assets and to divorce themselves from the payment system used by the West. So we have also seen the pivot into tangible assets. No longer the countries parking their excess dollar reserve into U.S. Treasury, which is coming to be a headache for the U.S. Treasury. You can see that the a lot of countries has actually been investing more into hard assets such as precious metals. So here, this is the fundamental behind the rally in metals market. Here we can see spot gold has actually been trading to a fresh all-time high, $4,642.90. So here we can see this is a fresh all-time high. The, 3 weeks ago, we see a pullback in the gold market from $4,550 to $4,264. So here we have seen that the market has resumed its rally, and if this is a trajectory, there's every possibility we will see higher prices going forward with a medium-term target at $5,100 per ounce in the spot gold. So by and large, I'm remaining very, very positive for gold. Okay, any kind of pullback should be seen to be a buying opportunity. In silver, the same thing. Silver is still leading gold by a wide margin this year. Like I said, it has already gone up by 26% for the 2 weeks of trading into 2026, whereas gold has only gained about 6+% odd. So silver has outrun and outperformed gold by a wide margin. So this continues to be the case here. We have all-time high at 93,070 cents per ounce, with the possibility of the market eventually challenging $97.51. That may not be the top because the next big number to look out for will be the $100 to $107 per ounce. I think the market may actually want to gun for at least $100 per ounce. So this is not the best place to be buying at this moment in time. If you have not already bought, it is very hard to actually contemplate buying at these current elevated prices. So if you happen to be long, just hang on to your position, protect your open positions, and then you see how the market can actually rally to perhaps the $100 per ounce, which may actually happen in this month itself. We only have 2 more weeks to go before the end of January, but we can see the silver market has been going from strength to strength. There is no saying that it cannot do the $100 per ounce before the end of January. Okay, here we have platinum. Platinum also had a very good run in 20 at the start of 2025. You can see that this year the high traded was $2,525 per ounce. Okay, and that has been a record, and it has been largely been dismissed since the war in Ukraine started. The West has actually sanctioned Russia, and a lot of the platinum actually comes out from Russia. So there is the impossibility of accessing platinum. Okay, and the platinum is used in a lot of fossil fuel cars, for example, the petrol cars. Okay, and it has been used in trying to clean up the carbon dioxide or the carbon monoxide that come out at the back of the car, and has been used widely to coat the catalytic converter. Many years ago, I read reports that thieves are actually targeting the catalytic converters of cars. They don't want the car; they're just going for this converter that is underneath the car. Okay, and it has been a case whereby Not only silver is in short supply, I think all the other industrial metals are also in short supply, so that we can see that going forward, we should be able to see higher prices beside what we saw here. Palladium is sometimes used as a substitute for platinum. These are interchangeable. We can see that the two biggest producer of palladium, unfortunately, is Russia and South Africa, meaning to say that these two countries are part of the BRICS, and if they do not want to export or for any kind of political reason, they restrict their export, we can see that it will actually impact the prices of palladium. Here we can see a structure very similar to what we saw in the platinum itself. While the platinum had actually rebounded from the recent low by about 90%, the same cannot be said for palladium. Palladium has only rebounded about maybe 80% just via visual inspection. Okay, but by and large, you can see that the trajectory suggests higher prices. Copper is a major base metal. Okay, it has been used in the electrification. Now we have all these talks about AI and the building of data centers and the hyperscalers. They need a lot of electricity, and copper is usually the metal that is behind this electrification. So demand for copper, so long as you believe the AI narrative to continue, should be a commodity that we want to watch. It is a record high of $6 per pound. Okay, the highest today was $6.19 recently. So we can see the trajectory is also suggesting that it's a shortage in copper, which will lead to higher prices in the immediate future.